Morning, everyone. Welcome to this morning's MPC Markets Morning Call, 27th of August, 2025. Headline for today, Trump's hostile takeover of the Fed weighs on investor sentiment. Obviously, we had Donald Trump overnight essentially fire Lisa Cook from the Federal Reserve, one of the Federal Reserve governors, and it's really pulled into question the independence of the central banks. So the way that it was generally set up across the world was central banks, because they have to make hard decisions about inflation, they have to make hard decisions around the economy. It was always separated out as an independent body. So I've written articles in the past, particularly when they've had a crack at Michelle Bullock here on the RBA, because we're always calling for rate cuts no matter what. We're always saying the sunny side on interest rates no matter what, because we're such a mortgage, or we have the highest level of mortgages in the world. Trump at the moment's got what they've done over there effectively is they've nationalised most of the debt. Most of the debt in Australia actually is with the people via their mortgages. Most of the debt in the US is via the government because they don't really charge any taxes, or certainly not a fair amount of taxes to the biggest companies over there. And the personal tax rate's really not, really doesn't fill the coffers anywhere near as much as what it could. Whereas obviously in Australia we pay a much higher marginal tax rate, etc. And we don't have states to deal with as well, which have an independent taxing regime. So essentially, he needs rates down to refinance this debt. And from all reports, it's around about $9 trillion over the next 12 months. And it really is the only thing that moves the needle on the debt. You can cut hundreds of thousands of jobs via the Doge cuts. You can bring in tariffs, but really, it's probably only around about half of what a 2% interest rate cut could bring. So Fed's really bullying. I mean, he did say a similar thing about Jerome Powell, and that just seemed to disappear miraculously, because obviously the accusations were unfounded. I mean, the irony of Trump making accusations of being dodgy to the Federal Reserve Board is just unbelievable, really. But he his glass house was smashed many years ago. So that really held back the market overall. And despite there was a little bit of buoyancy in the healthcare sector, Eli Lilly leading that. As you can see with the broader indexes, we drifted off yesterday, down 0.4. So did the Nikkei. Europe was a little bit weak as well, and I dare say this seems to be broad index selling overall, because the Nasdaq and the S&P and the Dow were all down very early on, but seem to recover a little bit. And we've got Nvidia earnings tomorrow morning. And that's obviously buoying things. There's supposed to be an outstanding result for Nvidia tomorrow. We'll cover that in just a moment. But broader index selling across the board, which you can kind of see generally starts in the Asian session, because we're obviously the first time zone to be in the new day. That sort of systematic selling and date-driven selling does usually have a knock-on effect. I was a little bit concerned about the US market last night, but the Eli Lilly announcement about a drug or once a day weight loss pill, which I'm not even going to pretend that I can announce, so I'm not even going to try. It saw their shares jump up around about 5%. So, and as well with Lisa Cook being fired, and then Trump essentially stacking or attempting to stack the Federal Reserve, because he'll have to make an appointment there. That is going to be obviously very, very good for the thematic of rates coming down, or the Fed bringing rates down. So I dare say that's where we've got that strength in the Russell there, with the small caps being a lot more sensitive to interest rates. Just having a look at the heat map here, you can see Eli Lilly, they're up 6%. The rest of the healthcare sector not really doing a hell of a lot. Interest rates lower helps the financials as well. We've got Palantir continuing to rally, which is the most expensive stock in the world, as they say. However, I want you to keep in mind when we go to the next slide, if the revenue growth's backing it up, it's not the most expensive stock in the world, and I think there's been a fair few people who are absolutely obliterated on trying to short that stock, and it's AI in the defence sector, and it really has, the crosshairs have aligned essentially to defence sector and the AI sector together. Are two very, very strong thematics at the moment. So we saw chip stocks head a little bit higher, and Boeing and GE there a little bit stronger as well. So the broader market, it was a bit nah. You see here the manufacturing or industrial sort of sector as well benefits from lower rates overall. So a little bit higher in that sector there, but not what I would call a super strong night. Everyone is really waiting for this Nvidia result tomorrow, and just going back to my example there with Palantir, we've seen Palantir rally thousands of percent essentially. But if you go back here, this is Nvidia's revenue breakdown, and data center and AI being the main driver. They were a gaming company, or they made gaming chips. A little bit for motor vehicles, but what Bitcoin miners ended up finding out was the GPUs actually made the most amount of difference in the processing power. Back in my trading days, we used to build and spec out our computers, which for low latency trading we needed. Really fast localized PCs for automated trading strategies. And I remember back then, and this is 5 or 6 years ago, we were buying serious Nvidia chips, and that was the CPU, which used to be the driver, and the memory, which used to be the driver, paled into significance as to what the GPU was doing in terms of the speed. So they have kind of fallen into this. Credit to Jensen, though, for just absolutely going gangbusters at it, and that is the sign of a fantastic founder, is to something unexpected props up and you take advantage of it. I mean, he's pivoted extraordinarily and done so well. So you can see here, that yellow line there is the share price, and look, it just tracks the revenue growth as really, and I mean their margins are so enormous. This is last year's revenue breakdown. They're possibly expecting a further 50%. Surge again, reaching 46 billion, and that's year on year, that is. So we would be that's looking at this column here. So in a year to have a 50% profit surge revenue, and look, another 12 to 15% jump from last month. The H20 chip, there is concern around this because the H20, they've asked the chip makers to stop making the H20 chips. There must be something going on in the background with China and demand, etc. So, I mean, there could be some bad news, but Jensen usually puts on a pretty good show, and everyone is super bullish this stock. Price action will be massively key here in this thing. If it delivers a really good result, and we don't see this stock rally, or it rallies and then gets hit immediately, I think that doesn't bode well for the broader market. Nvidia's almost been single-handedly holding up this market for quite some time now, and I'd be very concerned if we don't get good price action. So that price action I'll be looking at over a number of days or potentially a week, but not necessarily on a minute by minute basis. So and this is really the only thing that is going to move the needle markets wise, unless Trump does something silly. There's always the asterisk of the Trump disclaimer. I mean, we expect the unexpected essentially with him, but we've obviously got to get on with our days in terms of how markets are. So outside of him doing something out of control, this is really the only thing that anyone's going to be paying any attention to until next Friday's payrolls on the 5th. And then after that, I think share investors will be pretty focused on Apple's confirmed that they're launching a new iPhone 17, at a September 9 event, which will be the following week, sort of midweek, I suppose. And Yeah, look, that product launch is going to be fairly key. They've given us no reason to believe that it's just going to be nothing but a new processor and a new camera, because that's the last 15 releases. But yeah, I have grave concerns over Apple, because I really believe that that moat is going to disappear on smartphones, and if it does, the rest of their revenue streams are all tied to being in that Apple ecosystem. And if there is a leap forward, and I don't know what it is. If I did, I wouldn't be here talking to you guys. I'd be a billionaire. But if there was a leap forward in technology, say Meta's smart glasses becomes your phone, or some form of holographic or whatever, bendy phones, which I think Motorola's been developing and Samsung have been developing. If Apple doesn't lift their game, they're a BlackBerry moment away, or a Kodak moment away from being being fairly irrelevant. But that's 55% of their revenue, Apple, in terms of revenue, but everything else is tied to that. So yeah, that'll be very much in focus in a couple of weeks as well. So got the calendar here now. We had Fortescue yesterday, and Coles particularly. Fortescue drifted off, but everyone, the analysts just love to hate Fortescue. I don't know why they got a problem with it. Coles had an absolute bumper, which probably bodes well for Woolworths. I think new management, Amanda Bardwell, is going to do very well there. Hopefully, there's a positive result. There is the risk, obviously, but though, that Woolworths put on a couple of % yesterday. If they don't meet expectations, just to add, the downside's been absolutely punished, so it could get a little bit tricky. WiseTech today as well. I don't really see the distractions of their founding contract CEO, or whatever the hell he is now, Richard White, being a massive positive, and all the board turmoil and a massive acquisition going on. The books are going to be pretty complicated. So, and we're at extraordinarily expensive levels for WiseTech. So we're out of that at the moment. We'd be happy to buy back in maybe somewhere around the 90s or so, but that's 25% away. This stock does have a pretty strong track record of either rallying 20 or falling 20. So, not for the faint-hearted in that one. Lovisa and Worley, it'd be interesting to see how Lovisa goes. A little bit of competition there now. Some of the retail sectors, those bricks and mortar retailers have done very well. We've got Aussie CPI here at 11:30 as well, just a monthly. So overall, a relatively busy day overall, and the SPI was up around about 0.5% leading into the close. So I'd expect a fairly, expect a fairly buoyant sort of day. Gold was up. US dollar was only down slightly, so that's a pretty decent performance for gold, silver, copper, platinum. Crude was down a little bit. Iron ore was down a touch. Uranium obviously keeping on powering on, up 9% for the week there. Bitcoin bounced, but it's been a little bit doing its own thing, really, is probably the only way to put it. So expect a little bit of buoyancy in the gold sector today. BHP's been doing very well as well, and I think just those iron ore markets obviously open around about 11 o'clock. So and the lithium markets as well, and that on GFX. So we will expect a little bit of movement around that time overall. And just upcoming, just going to do a little bit of a promo here, which is not, I'm not overly great at the sales stuff, but I'm holding a free webinar at 12:30 on the 2nd of September, next Tuesday, that is. You can find us on socials, or, there's a website there, or you just send an email in to mark.gardner@mpcmarkets.com.au. That free webinar, you can register now. and there are limited seats, and we've got we released this yesterday, and it's nearly half full. So make sure you secure your spot. If we do sell out, then we just register anyway, and we will send a recording of the webinar afterwards. There hopefully will be a Q&A, depending on my tech skills, and we will cover, what the next phase of AI investing. So everyone obviously knows about Nvidia and Google and Microsoft and Amazon, but this is a lot more about the picks and shovels. Who are the beneficiaries going to be as the hyperscalers, being those big Mag 7 or Fab 5 or whatever the pundits are calling it now, what they're going to need to do with, in the CapEx spend they're going to need to make, because we are really in that sort of that second or third phase now with AI, and the monetization, even in the 2001 tech bubble, or sorry, tech area, there was the initial rollout of the internet. The likes of Tesla and Meta and Google and all those guys, they didn't turn up till 3 years after. So that software end and that hyperscaling end of the software end is, it's still a couple of years away. We've got to build this infrastructure, and we've got to and it's going to happen extraordinarily rapidly, and it's going to have a major effect on infrastructure economy and the economy overall. So go and register for that. Should be good value for everyone. And there's three or four stock picks in there as well, free stock picks. And when you register, you get you also get a free 8-page report, which is basically covers what most of the things we're going to cover in the webinar. So hope everyone has a great day, and we will speak again tomorrow morning. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.